All right. So good morning, guys. Last week Saturday we had a session and I talked about the basic doctor system. And this week we are going to be talking about so many things that are going to enable you understand why I even said let's execute from the HQM or Apex for some certain reason, right? So I'm going to talk about that. But today we are going to be talking about the structure, liquidity, and key level part of the doctor system. Meaning, this is the foundation of the doctor. This is where I got it from. I got it from the structure, liquidity, and the key level, and that is how I got to the model I trade, and that is what I'm going to be talking about today, right? It's going to be a lot, but I want you to pay very close attention. Now, under structure today, we're going to be talking about advanced market structure, and we're going to be talking about candlestick structure, right? Secondly, under liquidity, we are going to be talking about internal and external liquidity. Under key level, we are going to be talking about high probability points of interest you can execute your trade from. And under fair value gaps, we are going to be talking about how you can use them. And when they get disrespected, what do you do? I know it's going to be very difficult for us to cover all these things in the first 40 minutes, but I'm going to be fast and a little bit efficient so that at least everybody will try to grab what it is that I'm talking about. So, first of all, the people that are here, almost 100 people again, I hope there are no beginners that don't know anything in the market because what I'm going to be talking about is a little bit advanced, and I hope, hopefully, all of you know one or two things about trading and are a little bit advanced to easily digest what I'm talking about. Now, first of all, structure, liquidity, and key level, it's a concept on its own that has a very good reputation from people that effectively trade it. And also, shout out to the fourth man because he actually is the creator of this particular concept. And that is how we found a way to navigate through the market and understand price action. So, first thing first, this structure, liquidity, and key level I'm going to be talking about, it is after you have successfully created a storyline. It is after you have successfully created a storyline. What do I mean? For example, we have a key level right here. Okay. Whenever you have a key level, come in, guys. Whenever you have a key level, for example, on the daily time frame, and the market trades into the key level, remember, the market trades into the key level, taps and breaks on the H4 time frame. Let's say it's on the H4 time frame. Once the market breaks out on the H4 time frame, below here, we have a breakout on the H4 time frame. So we have H4BO. Now, once you have a breakout on the H4 time frame, I said you execute from the QM or from the apex, depending on which one is fresh. Now, let me give you why the ideology came like this. This is what I said in the basic doctor system. Still continue listening to what I'm saying. Now, the fourth man, who was my mentor, I'm not shy of mentioning his name, whether I'm teaching people or not, because he has played the best role in my life. Now, if you pay attention to the same thing, comes down to this, please. Once the market rejects from a daily level and the market gives you a breakout. Now, why I ignore this and pay attention to this and this is because when the liquidity is about to be created, because the theory of SLK says after the rejection, you want to see an advanced market structure. I'll talk about structure. Now, the advanced market structure is going to be a sweep of liquidity, which has happened right here. The sweep of liquidity has happened right here. A break of structure, which is going to happen right here, and a structural liquidity. Now, the market is going to pull back definitely. If the market pulls back to this RBS and drops, QM is going to be a point of interest. If the market pulls back to QM and then use this, then this is now liquidity and this is now a point of interest. The ideology for you to use QM or Apex automatically generate liquidity for you, because if the market mitigates this, then this is going to be fresh. And then this is going to be liquidity for this. Do you understand? And if the market mitigates this, then this is going to be fresh and this is going to be liquidity for this. So there is no stress in trying to understand liquidity all the time when you already have an idea. This is the basic idea you're going to be using to approach the market. That's why I said what I do can have a different name, but the idea is the same. I just give a different information, but the idea and everything is exactly the same. No difference. So that's what brought about this, right? So we want to talk about structure, and talking about structure here means you are basically talking about advanced market structure or candlestick structure. So these are the two types of structure I talk about, and I'll be very, very fast because I don't want to waste too much time. So when the market hits a daily key level and we have a H4 breakout, we want to see the H2 time frame give us an advanced market structure. So an advanced market structure is one of the three. So the type 1 structure for a sell is going to look like this. Market give you a sweep of liquidity, a breakout structure, a structural liquidity, and use any of the POI to sell. Structure type 1, right? Structure type 1. Structure type 1, sweep of liquidity. That is after the daily key level has been hit. After the daily key level has been hit, sweep of liquidity, breakout structure. Then market give you liquidity, which is a structural liquidity, and then you sell from any of those POIs, right? Can be the QM, can be the Apex. That is the first, type 1. Type 2 is the same thing, but this time around, the break of structure happened before the major break of structure. So it's like this. This is how type 2 looks like. The sweep of liquidity. This time around, in this one, we have one break of structure and two break of structures. But in this one, we have one break of structure. But there is a mini break of structure inside the major break of structure. Then we have what? Liquidity. And then we execute from what? The key level closest to liquidity. And then you sell from what? The apex. And then this is going to be where your sell is going to come from. This is what? Structure type 2. Right? This is what? Structure type 2. Now, structure type 3 is now different. These two structures, we call them the origin structures, right? Because they usually come at the beginning of a storyline. They can come in the middle of the storyline. I will explain very well, but this usually happens at the beginning of a storyline, meaning immediately after this thing happened, immediately after the rejection and the breakout, that is where they usually happen. Now, structure type 3 is I'll still draw for sell. Once the market give you something like this and breakout, then give you liquidity, and then this time around you are using the RBS to sell. Why? Because the market gives you liquidity right here. This is an RBS that got disrespected, and then you have liquidity. This is structure type 1, type 3. So we have structure type 1, structure type 2, and structure type 3. If you pay attention to all of them, they fulfill the criteria in the sense that, okay, the structure here, we're talking about an advanced market structure. This is how advanced market structure looks like. And if you pay attention to each and every one of this, there is a presence of liquidity and there is a presence of key level, because the system doesn't work on its own. The system can never work on its own. Structure must be there, liquidity must be there, and key level can be there. Now, why I wrote FVG here is because you always hear me say FVG must be across, FVG must be above, FVG must be below, because fair value gap and liquidity are the two most important things on the chart based on our system. How and why? Because market does only two things. Is either the market want to go and attack liquidity, or market want to rebalance a fair value gap, an imbalance, anything you want to call it, an inefficiency, or nadine. So the market does only two things. Now, these are the three structures you want to see for you to take a trade. These are the only three structures that you want to see for you to effectively take a trade. These are the only three structures. Now, how do you know which key level to execute from? How do we talk about fair value gap and liquidity? Now, this is for advanced market structure. Am I correct? Now, let's talk about candlestick structure. Let me go a little bit sideways. Now, candlestick structure, these three can come both in candlestick formation. This is the formation they come based on what? The entire structure of a lot of candles. But 2 or 3 to 4 candles can form this entire structure, and I've explained it before. Now, the first thing you want to see if a couple of candles are going to form this thing and it's going to be very valid is, let's still extend this daily key level. Now, let's say the market came on the H4 time frame and give us, like, I'll be very snappy. Let's say this is a bullish candle, and let's say this is like this, right? This is a bullish candle, and then the next candle can come and it's going to be a heavy bearish candle like this. So the market is now going to be rejecting from here, don't forget. And then this candle is going to take out this high, And then we're going to have another candle right here. Let's make this a bullish candle, right? And let's say it has a wick too, like this. And then we're going to have the next bearish candle like this. Selling from this key level right here. All right. Now, once the market rejects from a key level, this four formation, these four candles right here, I'm coming. This is liquidity, right? This four candles is a candlestick structure, meaning these four candles now form the entire type 1 structure. How? This first candle has liquidity above it, and the next candle sweeps above this candle, meaning you have what? This criteria fulfilled. This one, sweep of liquidity. Then there's going to be a break of structure from the left-hand side of the chart. After the market has tapped on this daily key level, don't forget, there's going to be a break of structure. This second candle here is going to cause that break of structure. After causing that break of structure, the next candle that is going to open itself is going to create liquidity for this key level to hold. Then you have the formation of this inducement. Then the next candle, these four candles alone have formed this entire structure. The sweep of liquidity that happened above here, the break of structure, there's going to be a previous break of structure here. I don't want to draw the entire thing, right? There's going to be a previous break of structure here. Let me just try and draw for you guys so you guys can see. And there's going to be like this. The candles, let me make them like this. Yeah, good. Good. So this is going to be a bearish candle, and this is going to be a bullish candle. So there's a breakout here, right? Because what? Market rejected and give us a breakout. Then this candle formation alone has given you an advanced market structure. While you have a sweep of liquidity right here, you have a break of structure, and you have a structural liquidity, and the market is now going to use this particular one to sell. So this is a type 1 candlestick structure, right? So let's talk about the type 2 candlestick structure. Let me delete the remaining candles. They are not very useful. They are just going to exhaust our spaces. Now, let's talk about the type 2 candlestick structure. The type 2 candlestick structure is almost the same with this one. So let me just take it as a continuation of this particular one. Now, you're going to have something like this, as something like this. Like this. This is going to be a YM effect candle like this. Now, what is this? This is an RBS. Yes. And then what is this? This is liquidity. Now, this is now liquidity for this RBS to hold. If you notice between here, what we have here is a fair value gap, right? So that's why I have FVG here. I'll talk about how FVG can be used as well, liquidity. So how the highs and lows of candles can be used as liquidity. So then the market is now going to what? Open up here, use this key level, tap on it, and then sell. So it's going to close what? Bearish. So it's going to be a bearish candle after it has mitigated this particular key level. So this one is now structured type 3 based on candlestick. Just these candlesticks have formed the entire structure. So this is what? The left-hand side of my screen, advanced market structure, and this is what? Candlestick structure. This one, this fair value gap here must be present, right? This fair value gap here must be present, and that's why it's going to form an RBS. Look at this RBS that got disrespected. This liquidity, this is the weak here, and this is the entry. Tap on this. Exactly the advanced market structure is exactly, but it is formed by just few candles, and you're going to execute, and it's going to give you what you're looking for. These things are done after key level has been hit, right? It's only done after key level has been hit, and there's a breakout, and you have a certain direction. Now, let's talk about liquidity. This is just structure. Like I said, I'm going to be very snappy. Now, what is liquidity? Liquidity is just turning points in the marketplace. I don't want to say where stop losses are this and that and this and that. Least, no. I don't have business with that. Liquidity is the highs and lows of candles. Liquidity can come in form of highs and lows of candles. It can come in form of turning points in the marketplace. So let's go into the chart so we can talk about a little bit of liquidity. I'm not going to stress anything. So anywhere the market goes and turns around, it has created liquidity at that particular place. For example, the market turned around here. So this is liquidity. The market turned around to the downside here, liquidity. The market turns to the downside, liquidity turns to the downside, liquidity to the upside, liquidity to the upside, liquidity. So all these long weeks of candles highs and lows, and the turning points, they are all liquidity. Now, the difference is that there is external and internal liquidity. So I'll talk about them and I'll just skip them because I want us to go into the chat and we have so many things to talk about today. Now, liquidity are of two types. We have the internal range liquidity and we have the external range liquidity. The internal range liquidity are the ones we use for entry, and the external range liquidity are the ones we use for target. So we are targeting external liquidity all the time, and we are using internal liquidity for entry, meaning we have different type of internal liquidity. We have inducements, we have structural liquidity, and we also have sessional liquidities like Asian highs, Asian lows, previous daily highs, previous daily lows. All these are internal liquidities because they are used for entries. Then we have external liquidity. External liquidity are liquidities we use for target. For example, now, this liquidity here is an internal liquidity for entry, internal liquidity for entry. Now, these two here are structural liquidities, right? And this one here is an inducement, okay? Now, an inducement is what? Why is it different from? Because inducement causes expansion. Inducement always causes what? Expansion. Anytime the market take out inducement, there's 90% going to be a heavy move, which is an expansion. You understand? So inducement causes expansion. So now, where do we target after taking out this internal liquidity? That's the external liquidity, which is this one, which is this one, and which is this one. Now, this is what we call what? External liquidity. And this external liquidity are used as target, whereas they can come in form of trendline liquidity, they can come in form of double tops and double bottoms, and they can also come in form of sessional liquidities. These are external liquidities. I'm trying to be very fast on that, right? So they can come in form of internal liquidity, and they can also come in form of external liquidity. All right, they can come in form of internal liquidity and they can also come in form of external liquidity. So this is advanced market structure. This is candlestick structure. You need to understand all those things. And we'll try to go into the chart and talk about them. And we also talk about liquidity, internal and external liquidity. So anytime you want to enter the chart, liquidity must be there. Liquidity must be there. Now let's talk about key levels. Key levels are just point of entry, or we use them to build a storyline, which I've talked about. Now, how do you know which key level to use? Now, any key level can be used for entry. The only ones I don't like using are OCLs, but any key level can be used for entry: RBS, SBR, QMs, and apexes. Now, how do you know which key level to use? I'll tell you what makes a key level high probability. Now, for an RBS or an SBR to be high probability, I'm talking about RBS, this one, or this one, to be high probability, there must be the presence of, you can trade it when it's not high probability. You can, but for it to be high probability, they need to be a fair value gap across, meaning they need to be a fair value gap across the zone like this, right? Across something like this. So it's going to make a lot of sense and it's going to be very easy for us. So they need to be a fair value gap across. There can be a fair value gap below. In case of this, you can see the fair value gap is below, not across. And there can also be a fair value gap above if you are buying. So fair value gap must be around that your point of entry if you are trading SBR or RBS. Secondly, for a point of interest to be high probability, it needs to be overlapping with a higher time frame point of interest. What do I mean? Let's say your structure is on the 30 minutes time frame, and this is your entry PY. So you want to see this PY exactly where it is marked in the H1, H2, or H4. There need to be another point of interest that is there and it is fresh also. So it's going to make it high probability. Then finally, there need to be liquidity. So once you have liquidity, fair value gap, and you have a higher time frame overlapping point of interest around there, then it's making your point of interest high probability automatically. And you can execute any of this structure based on that high time frame point of interest. But in cases of candlestick structure, usually this occurs on the H4, usually H4, H2. And that's why the candlestick structure automatically is going to make sense for you. There is nothing too stressful around there. Now, the highest probability key level I've seen on the chart, listen very well, there are key levels with history. I don't know if you understand. What I mean by key levels with history is key levels that have been used before and then they got disrespected. Now, the best key levels to use in executing, especially structure type 3, which is this or this, is, for example, this is a key level. This is an A-shaped key level. Market came to it, rejected twice or once, anyone. Now, let's say this is an A-shaped key level right here, and it was supposed to be used for what? For a sell. Market came, rejected. With a week, market came, rejected again. Then the next candle that came right there came and penetrated the key level. Once it penetrates the key level, then markets create liquidity and use it for a buy. Now, this is the highest probability key level. And any key level that gets disrespected This key level has history, and then the market is going to use it as what? As an institutional reference point to buy or sell again, depending on what you want to do with it. So if you are trading towards the direction of the market, if you have something like this, it is what? A plus. It's very high probability because this key level has history. Now it can also come in form of like this, disrespected it like this, then used it. It is very okay, and it is very high probability for you to use this particular key level. Okay, now, and this type of setup, you want to see a fair value gap what across that particular setup. Now, inside the fair value gap, I've done talked about key levels. Now let's talk about FVG. Now, FVG is a formation of 3 candles, right? It's a formation of 3 candles, and I've talked about where I want to see it. If your POI is also a QM, you don't always need to see a fair value gap, but fair value gap makes it high probability. But it's okay not to see a fair value gap, but fair value gap makes it what? High probability. So once you have a fair value gap within a inside a QM, it makes it high probability. And then if your POI is an apex, you want to see an engulfing buy or an engulfing sell, meaning you want to see the candle that caused the break engulf this high, this liquidity high need to be taken out. Why do we always need to want to see this high need to be taken out? Because the market has taken out liquidity below there, above here, right? So the market has grabbed liquidity. We want to see the market grab the other side of the liquidity. So that's why this is making this high protected. So this zone makes it what? A very high probability zone. Now, once you see 2 protections like this, you are not said to use this except if this has its own liquidity. If this one doesn't have its own liquidity, forget. Then whether this one, the market has taken liquidity above here or not, then this one is going to be serving as liquidity for what? This particular one to hold, right? So that is for that. So an FVG, which is something like this, a fair value gap. A fair value gap has its own liquidity that is called a single candle liquidity. And that is why FVG makes sense. Once you have the formation of fair value gap, let's go into the chart and let's just look for one. So we can use it as an explanation. We can use it for explanation. Now let's take a look at this. For example, this is a fair value gap, right? We have the low of the fair value gap, the high of the fair value gap, and the low of the fair value gap right there. So now, the formation of this fair value gap, the low of this candle that created this FVG is an internal liquidity. So any FVG you see, it has the liquidity of its own. Now, look at the candlestick structure we just talked about. This is liquidity, and this is a key level that has history. This key level has history because it has been used before, and then the market disrespected it. Then we have this fair value gap. This is our liquidity. Then this is a point of execution for you to take an A plus setup, especially if you are trading towards the direction of the market. And this is a clear indication that you are trading towards the direction of the market. Now, the same thing that happened here, we have this low in form of what? Liquidity, because it's a fair value gap. So this is liquidity. They will ask me, doctor, this is not liquidity. Yes, this is liquidity, but you are looking forward to a key level that has history that you want to use to execute from here. So if you are looking for a key level that has history, you are looking for a key level that has been tested. I'm talking about structure type 3. This is basically how we trade structure type 3 because it's the best. When I was learning from my mentor, he always used to say, continuation setup has 70% rate. I will never forget. His 2024 videos, 2023 videos, if I remember, I can't remember the year. It was not 2025 though. You always say, continuation setup is the best. And that's why I'm so perfect in continuation setup, and I found other ways. So you're going to be looking for a key level that has history, and that's how we missed this setup. Because what? This is a key level right here that have been tested, disrespected, tested again, overlapping inside this FVG. So we're looking forward to use this because overlapping inside this FVG to take this buy, and that's how we ended up missing the buy. We're not looking forward to this because there's no key level that has history right there. Okay. And also we'll talk more about how you can understand this type of structure. So you're looking forward to, especially in the RBS or SBR. So inside the fair value gap, there's always liquidity, and that's what we're talking about a fair value gap. Now, with understanding advanced market structure, in structure, I said we're going to talk about advanced market structure, which we did right here. We're talking about candlestick structure, which we did right here. Talk about liquidity, which I've already talked about them. Internal and external key levels, I talked about how to pick a high probability key level, and fair value gap, I talked about how we need it in form of entry, how it forms liquidity, and how this setup needs fair value gap. So we go into the chart and we talk about so many things. First thing first, before you apply the SLK itself, you need to understand, you need to know, you need to put it at the back of your mind that what whatsoever it is, you need a clear direction first. Now, I'll talk about one confirmation entry. And the only confirmation entry I'm going to talk about is one, which is an engulfing buy or an engulfing sell candle. Listen, which is what? An engulfing buy or an engulfing sell candle. And that's the only point of interest I'm going to talk about. A confirmation entry, meaning once the market hits your POI, let's say the market hit a POI, right? Now, and you see this type of candle that is in form of CRT. So this is a confirmation entry. And you don't want to see the market take a lot of time before coming back into it. Immediately after this candle close, you want to see this next candle tap into it. So this is like, you understand what I'm trying to say. So this is gold, and we're going to be using gold to talk about any type of structure we talked about today. So just pay attention. So this last Friday trade, but I'll just delete it because this one don't reach TP. So I talked about a lot of structures to be advanced market structure and so many things. Now, look at this. This is a fair value gap. Look at the entire move to the upside here. Did the markets have any place to come back to? The market does two things. Doctor said the market does two things. Not only me, a lot of people have said it. Okay. If the market want to come back, rebalance and imbalance, or the market want to what? Take out liquidity. Those are the only two things. Now, if you pay attention to this now, this is a fair value gap. The market has used it for the first time. Now, the first time the market was using it, look at the market drop into it. Is there any key level that has history here? Yes, this one. This is a point of execution. Why? Inside this fair value gap here, we have a liquidity above here, and we have something like this. And then this is a QM, which is very accurate. And the market used the QM here, meaning this QM has history. And then the market came back exactly into that QM, and then boom, the buy started again. So this is what we call a key level that have history towards the direction of the market. Now, the same thing. Now, based on the entire market structure, which key level do we have again that has history? Look at this key level. This key level, no, this key level don't have any history, but it's also cool. It's an OCL that got disrespected, and this is your clear liquidity, right? This is also based on advanced market structure, and the market used this particular thing to start the buy to the upside. Very simple, right? And then the same thing here again. If you take a look at this entire thing, we have the sweep of liquidity right here, and we have the break of just below here, and we have the structural liquidity just right here. The candlestick structure I just explained. And then what's this? Fair value gap. Yes. Then which POI are you going to be picking here? Are you going to be taking this or this? First of all, we want to take a POI that is overlapping with a higher time frame point of interest. So as of this point, I think I used Owanda because sometimes Owanda makes more sense because we have better point of interest. You can see the way I use both of them. Now, what is making a POI high probability? If it's overlapping with the higher time frame POI, which is this, there's a H4 POI here, and on the H1 time frame, right there we have what? An advanced market structure, which is what? We have the fair value gap below here. We have this in form of our liquidity. So we don't need to stress ourselves. Liquidity is there as far as the fair value gap is there. Market need to rebalance this FVG, come into this zone, which are refined into this zone. And the market have a sweep of liquidity right there. And the market has a break of structure, which happens just below here. And the market have a structural liquidity. And this is an advanced market structure for the market to now use and sell. And that is what brought about that setup you saw on my screen. And it was a very beautiful sell. Right? So based on candlestick or based on whatsoever it is, all we need to see is a sweep, a break, and whatsoever it is. And that's all. And you enter the chart. If you want to take continuation entries, even if you're on the 15 minutes time frame, which is one of the best time frame, 15, 30 minutes, you want to see a key level that have history. For example, let's take a look at this. You want to see, what am I saying? You want to pick a key level that have history, meaning a key level that have been used consistently. Now, if you take a look at this gap right here, we have liquidity right there already, but still we have this gap right here. Now, what you want to do is mark out the FVG before the market comes back to that place. Then you drag back. Now, you dragging behind, you are going to easily pick up a key level that have history. So that's what you're going to be doing if you want the key level that have history. So based on advanced market structure, you're going to see a lot of setups and a lot of continuation setups. Now, take a look at this. The sell has already started. Quite accurate. Now the market created a gap right here. Quite very beautiful. You know, I'm a genius when it comes to continuation entries. So I can easily pick up continuation entries anywhere. And then we have something like this, right? Now there's the gap. You go behind. Look at where is the market have this continuous testing. Look at this key level that have history. Now this is the key level that have history overlapping inside this imbalance. So this is going to be your point of execution. Why the market disrespected it and then used it again, overlapping inside this imbalance, which will have this in form of liquidity, and then you sell right there. This is going to be your sell. Because what? The move have already started. Remember, I told my lifetime mentorship students that right now what I do is I'm not interested in where the move started, even though I was a participant from here. I look at this on the 15 minutes time frame. It will enable you to now use this key level. Look at this is your FVG. So you have this as an internal liquidity. Then you are looking for a key level that have history. Not always, but it is the strongest key level you can find in the entire chart. Okay, or you can use this RBS like this, or any of this that have history. Yeah, beautiful. This one, and then going to sell from here. The same thing right here, something like this, right? I'm basically talking about how continuation entry is happening. Now, the same thing. Now, let's take a look at this little price action. This small price action that you think they are nonsense, right? Look at this. There's a fair value gap right here. After the market has started this move, I explained, right? It is after. Market give a 15-minute breakout, quite all right. We have an imbalance right here, quite all right, on the 15 minutes time frame. So you box the entire FVG right there, which is very little, and you're going to be dragging back, and you look at, is there any key level that have history that is overlapping with that, which you usually have? Okay, look at this. Look at this. Very clean, right? Then this is going to be your buy. Now look at this little continuation to the upside again. We have a very little FVG right here. The low is liquidity, so that's why it's very simple for us to know. Then let's check. Do we have a key level that have history? Yes. Why this key level has been tested here. So this is a key level that have history for you to take a continuation setup. Look at the way I'm emphasizing God. Very simple. You have to do it towards the direction of the market. Once you master this, you can do this accurately. I don't know why I'm emphasizing on continuation setup. So any of this candlestick structure, any of the structure you see, you can trade it very beautifully. So I think I can use other pairs. We have very few minutes left, 4 minutes left. So FVG is very, very strong, and FVG makes a lot of sense. I'm talking about both advanced market structure, candlestick structure, how they overlap with fair value gaps, and how everything makes sense. So once you blend everything together right here, it's going to make a lot of sense from the buy to the sell. Sometimes you don't need to build a storyline, especially for me. Once I have a structure on the high time frame, for example, just like this, I will wait for this structure to start playing out. Me, I'm very patient. Oh, you all know I don't have to say that. Once it start playing out, as far as it is gold, I've traded gold for quite some time. It made me the most money this year, So I would wait for it to start. Once it starts, I will look for my continuation because it is called continuation. 14B is also a continuation. There is a lot of advanced stuff in my system, But right now we're stopping at this. Okay, very simple. Use this because it has a history and it has an internal liquidity, and that's yourself right there. And the confirmation entry I talked about. If you are not so confident, right? Now look at this. Market tapped. Look at the rejection. Give the formation of the CRT. Then this is a confirmation entry, both for me and my mentor, not only me. Now the confirmation entry, I don't execute exactly from here, no. I use this. If it's a sell, I measure from the low to from the high down to the low of this candle, and I execute from the 35%. This line is 35%. There's 50%, and this, whatsoever it is, absolute. So I will execute from 35%, and then that's why I have it on my feet, and then I sell from here. Meaning, if you don't trust the zone, you wait for this particular thing to happen, then you can trade to wherever you want to trade to, right? Very simple. Now, this is the type of confirmation entry I just talked about because you want to see the next candle trade into it. And this is what we call a continuation setup. Now, I don't know. I'll try my very best to look for an origin setup. Where did I see an origin setup last? Let's go into the 4-hour time frame. Look for candlestick structure and so many types of structures. We need to look for a candlestick structure and so many things to show you guys. Let me use forex.com this time around because their structures are different. So I pay very close attention to all of them. Right, let's take a look at it. All right, 1 hour. Now, this advanced market structure, the trade I took that was 1:15. It was an advanced market structure. Very simple. What happened here was a sweep of liquidity. Remember, if it's an apex, you want to see it as an engulfing buy or an engulfing sell candle. Then I used this to enter. Then we have liquidity right here. Can you see this time around? Was it a fair value gap? No. What happened? It is you need see anything you're doing. If you are opposing the direction of the market, let me emphasize again. You go hit SLO. No matter what you are doing, make sure you are trading towards the direction of the market. This happened, and then we have a break of structure. So this is structure type 1 because we have a sweep of liquidity, a break of structure, and a structural liquidity right here, which is in form of engineer liquidity. Market drop into it, and then use this key level to buy. So this advanced market structure. right? Let's go into the 4-hour time frame. You can see some more things right there, more things, right? There's a lot on the chart, there's a lot on the chart. Right. Now, this is an advanced market structure. This is a candlestick structure, but it's in form of an advanced market structure right there. Sorry, can't have this, guys. Felix. So now we have something like this, sweep of liquidity, a little bit that happened here, and a breakout structure. And then you can see now where is your structural liquidity? After this break, just look at this candle. After this candle break down to the downside, the next candle came up. Did it tap on the apex? No. It is the liquidity. Then the next candle tap on the apex. They'll say, but doctor, this is not an engulfing candle. Yes. But when you go to the 2-hour, 1 hour, I took this trade, if you can remember, I took this trade so I can remember whatsoever it is. On the 2-hour, 1 hour time frame, it's not an engulfing candle, but this is the OCL that the market used on the 2-hour time frame. Quite all right, we all believe. And this is the liquidity from the 4-hour time frame. Quite all right, we all believe. But now, this is the point. If you go into the 1 hour time frame, you will notice that it is the criteria for it to be an entry. Remember, I said it just needs to be overlapped with the higher time frame. This is a very big fair value gap, and this is the key level right here. And this is one of my model I call model 3, which we're going to be discussing very it's just a model 3 though. So this is what brought about this entry. So this is a candlestick structure you can see, but it's not an engulfing sell, but it makes sense on the lower time frame. These RBS and everything. So this is it. So you can see a lot of it everywhere. A lot of it, the entry from this zone, look at it, sweep of liquidity right here, break of structure, and this next candle creating what? Structural liquidity, which is in form of candlestick structure. The same thing here, confirmation entry buy after the engulfing buy candle. So many things, right?